How are credit unions exempt from the Community Reinvestment Act, also known as the CRA? The short answer is credit unions are not subject to the CRA because they were built under a different regulatory framework with a similar mission already baked in. Let's start with what the Community Reinvestment Act actually does. The CRA was passed in 1977 to address concerns that banks were not adequately serving all parts of their communities, especially low and moderate income neighborhoods. It requires banks to demonstrate that they are meeting the credit needs of the communities where they operate, including lending, investment, and service activity. Regulators evaluate banks on their CRA performance, and those ratings can impact things like mergers or expansions. Now here's the key distinction. Credit unions are not banks. Credit unions are member-owned, non-profit financial cooperatives. They operate under a field of membership, meaning they are designed to serve a specific group of people, often defined by geography, employer, association, or community. Because of that structure, regulators have historically viewed credit unions as already being mission-driven institutions that exist to serve their members rather than maximize profit. Credit unions are regulated primarily under a different federal law, the Federal Credit Union Act, and overseen by the National Credit Union Administration instead of bank regulators like the Federal Reserve or the OCC. The reasoning behind the exemption is this. Because credit unions are nonprofit, member-focused, and often community-based by design, policymakers historically believed they did not need the same kind of external obligation that banks do under the CRA. However, that doesn't mean credit unions have no community obligations. Credit unions are still expected to serve their membership base responsibly, and many participate in programs that support underserved communities, small dollar lending, and financial inclusion. In fact, many credit unions emphasize that serving everyday consumers, well, especially those who might not qualify for traditional banking, is central to their mission. That said, this exemption has become a point of debate. Some critics argue that as credit unions grow larger and compete more directly with banks, they should be subject to CRA requirements as well. Others argue that imposing CRA on credit unions would undermine their cooperative model and add unnecessary regulatory burden. So, in simple terms, credit unions are exempt from the CRA because they operate under a different legal and mission structure, one that was originally designed to serve defined communities without the need for the same external mandates placed on banks. The debate today isn't about whether they're exempt. It's about whether that exemption still makes sense in a changing financial landscape.